all that's happening globally. As we mentioned, the IMF has cut their global growth forecast, and that's dampened sentiment globally. Shaun Rein, the managing director of China Market Research Group, joins us on the phone line from Shanghai. Shaun, hi, good morning, and thanks for being with us. You know, the IMF also said that the impact of the China slowdown is greater than what was previously expected. What's your own sense of how much the growth in China could slow down to?
Well, the economy here is weak. Okay, we expect growth to be around 6.8 to 7% for the fourth quarter of this year. And what you see is one of the negative aspects is that the purchasing managing index has shown that there's actually a sort of retraction. Growth is the factory is shrinking. It's about a 49.7%. So the economy here is weak. However, it's not as weak as a lot of people are making it out to be. So there's been too much panic, both in the equity markets and most importantly, I think, in commodities. So I actually, if you're sort of a longer-term investor with a stomach for risk, I would be looking at getting back into some of the iron ore and copper and gasoline, because what we're seeing is the actual consumption of commodities is still going on fairly strong in China, and it's still at a growth rate. We're not seeing, a real massive recession when it comes to commodities on the actual consumption side.
Okay, well, this is more a near-term question, Shaun. The Chinese markets will be opening after a gap of 4 trading holidays. Now, what we hear from the Yum brand's results is that the China same-store sales disappointed. They grew only by 2%. The expectations from the street was more like 6 to 7%. This and the PMI numbers together, the market could react a little bit to the PMI numbers, but after that, the holidays started. Do you think the markets will be wanting to discount the bad news when China opens tomorrow?
Well, I think the markets will do relatively well. You've seen tourism numbers have stayed fairly strong, as have retail sales during the Golden Week. I think Yum Brands has dropped, but that's because Yum Brands is not a bellwether for consumption anymore. It's really just a poorly run company in China right now over the last 3 to 5 years. Okay. They really betrayed the trust of the consumer with their food quality scandals, and they've really been launching very odd discount promotions and a really poorly crafted strategy. So I think that Yum's brands need to be separated from how consumption is going on in the market. This consumption story is still fairly strong. I would be looking more at companies like Nike, Starbucks, Adidas, Anta, Apple as looking at whether or not consumption is still strong, and they really are. You saw that Nike sales went up about 30% last quarter in China year on year.
Okay, so your short point is that China's bad news is over-discounted by global markets and experts.
Yeah, I mean, there's definitely bad news here. Don't get me wrong. There's a lot of weakness, but it's actually in many ways a healthy weakness because the government isn't adding too much debt with adding, fiscal monetary expansion, which is smart. They're trying to rein in some of the overcapacity on the industrial side, and they're really pushing more innovation, which I wrote in my last book, The End of Copycat China, and services. Okay. And when you see the official service index, we're seeing growth at about a 53 number. So I wouldn't be too bearish on China's economy.
Fair point. Thank you very much, Shaun Rein, for putting all that into perspective.